Craig Butt, Director of Loan Market Canberra. Thanks for joining us for our latest market update for 2015. Well, still a fantastic time to be a homeowner in Australia, with the Reserve Bank keeping interest rates at record low levels and the bank still being flush with money. The big news item, I guess, since we last met though, is the enormous amount of change that's happened in the investment landscape, particularly around investment loans and interest-only loans. APRA have made no secret of the fact that they think the banks have loosened their lending standards a little bit too much and relaxed things. They've made it a little bit too easy for people to get money. So they're really starting to dig their claws into the major banks at the moment and putting some quite harsh restrictions around, one, the amount of investment lending they're allowed to actually do, and two, the levels of capital they have to hold to do that. We've seen banks manage this in many different ways, with reductions in loan-to-value ratios, increasing serviceability rates so people can't lend quite as much money, increasing of interest rates. Some lenders, to even sort of meet this criteria, have actually had to pull out of investment lending altogether, meaning that current clients that have loans with them are not able to get increases or any new lending. I mean, they've got no choice but to look to move. The big winner in this has been the smaller lenders, so your Tier 2 and Tier 3 lenders, and your non-bank lenders. They're not quite so harshly restricted and still quite open with their policies, still quite low with their interest rates, and as the saying goes, make hay while the sun shines. They're certainly doing that at the moment, making big inroads to the major banks in regards to the amount of lending they're doing, particularly to investors. The people this is probably affecting more than any, or we believe is going to affect more than any, is people that have purchased properties off the plan. So if you've signed a contract to purchase property off the plan and you haven't completed that yet, I'd just suggest that you'd speak to your finance specialist and have a look at your numbers again, just to make sure that you're actually going to be okay and be able to complete that purchase. There has been some quite radical changes, but like I said, get a specialist on your side and they'll certainly be able to find the right solution for you. Not all doom and gloom though. Wherever there's rain, there's rainbows, and the rainbows at the moment, or the pot of gold I should say, is probably for the owner-occupied homeowner. We're seeing banks fight more fiercely for owner-occupied loans than we've ever seen before. Interest rate discounts that we've never seen before. It's not uncommon for myself or any of the rest of the guys here at Loan Market to find savings of tens of thousands of dollars for our customers, doing that almost on a daily basis at the moment. There's also quite large incentives from the banks as well as they compete for that piece of the market. So we're seeing rebates of up to $2,000 for people purchasing owner-occupied homes or refinancing their loans across. Like I said, interest rate levels that we've at low levels that we've never seen before. It's certainly a really, really competitive time to be looking for a home loan. So in closing, I'd just like to say if you do need a hand with any of these things or want anyone to look over your numbers, myself or any of the guys at Loan Market Canberra would be happy to do so for you. Until next time, cheers.